Do you own Tesla stock? If so, find out how that investment will turn out. If not, discover whether it is a good venture or not. Stay tuned and keep your eye on the details. Electric vehicles, or EVs, are something that the earlier generations could only dream of. AI-powered vehicles are even more of an incredible idea in the early years of civilization. Nowadays, AI, or artificial intelligence, has become somewhat of a normal part of people's everyday lives. That said, a lot of people have been investing in Tesla stocks, the leading company known for such. Today's video finds out why Cathie Wood stated that Tesla's sell-off is over. Tesla is an American automotive and clean energy company that designs, develops, manufactures, leases, and sells electric vehicles and energy generation and storage systems in the United States and other parts of the world. With futuristic and eco-friendly goals, Tesla became a name known all over the globe. As mentioned, you will find out why Cathie Wood stated that Tesla's sell-off is over. But first, what is a sell-off? By definition, a sell-off means a sell of assets, typically at a low price, carried out to dispose of them rather than as normal trade or simply as a sell of shares, bonds, or commodities, especially one that causes a fall in price. A sell-off occurs when a large volume of securities is sold in a short period of time, causing the price of a security to fall in rapid succession. As more shares are offered than buyers are willing to accept, the price decline may accelerate as market psychology turns pessimistic. Active Shanghai plant suspends some shipment after COVID cases. This headline, brought by unforeseen circumstances that spread across the globe, affected the stock market of not only Tesla, but also other companies. First, this is a company that ships parts to Tesla and General Motors that have been suspected because 2 of their workers contracted COVID-19 at the time. It was suspended since China and its capital, Shanghai, had been strict when COVID cases rampantly spread across the globe. Most factories in the said country went on lockdown for several weeks, while some took months and eventually struggled to catch up when they started operating again. Even though they were ultimately able to keep up, the lagging process affected Tesla since the long-running lockdowns also affected the export process. This, in turn, affected the economy, which then affected stock markets. In other news, which will definitely make Tesla owners feel good about their investment, the present Indonesian President announced a plan to meet with Elon Musk to talk about nickel, a raw material that can be used to build batteries. This is significant and relevant at the same time, since when it comes to electrical companies, there have been numerous issues regarding supply chains, and that fact that the Indonesian president plans to meet with Musk to talk about Tesla and a potential nickel supply. Just imagine how beneficial it will be if this comes to fruition. Who is Cathie Wood, and why do her words carry weight? According to Forbes, Cathie Wood, an American investor, a star stock picker, and the founder, CEO, and CIO of ARK Invest, a company with $60 billion in assets that invests in innovations like self-driving cars and genomics. Cathie Wood is often called the most underrated investor in the game, since not only is she incredibly persuasive in her investment arguments, but she's also got the proven results to back up her surprisingly discerning claims. Cathie Wood provides monthly updates about several things like monetary and economic policies, innovations, what can be expected in her field of expertise, and comments on the Fed's decisions. The Federal Reserve System, commonly known as the Fed, is the central bank of the U.S., which regulates the U.S. monetary and financial system. In a recent video Cathie made, she stated that the Fed's move to raise interest rates by 50% was wrong. Additionally, she mentioned that the U.S. can potentially go into recession since Europe and China are currently in recession. Because of this, she deemed that the move to raise interest rates is wrong, as it is not the right time because there is a lot of pressure on the global economy and within the U.S. Cathie further stated, "The valuations of our company now, if you look at them from many different angles, are below those of the Nasdaq. And as I mentioned, we do not believe that the Nasdaq, certainly not the Nasdaq 100, includes enough disruptive innovation opportunities as our strategies do." Regarding the monetary and fiscal policies and economic market indicators, she said that the Fed's decision in raising interest rates to 50 basis points would be a mistake. Moreover, she said that markets are corroborating and agreed with the idea that the Fed is making a mistake. According to her, the stock market went through a spasm. The S&P is down to 15% from its peak. On the other hand, the Nasdaq is down 25% from its peak. Pure play innovation strategies like ours are down to 60 to 75%. So that's not just a spasm, a convulsion, said Wood. Such words coming from Cathie Wood, known for her knowledge in the investing industry, are alarming for investors. She further stated that if people think that innovation companies that are not in benchmarks are witnessing the end of their world, it is not that far from the truth. The tendency to move towards benchmarks in risk-off environments is a huge inefficiency. Wood added, "It is ridiculous that the genomic revolution and blockchain technology and crypto assets behave exactly alike. In fact, crypto assets began to correlate highly with the Nasdaq starting at the beginning of COVID. Before that, there was no correlation at all, and so we think this is an anomaly, a massive anomaly, that with time it will correct, and the inefficiencies will be introduced back into the market." Before we continue with this video, make sure to hit the like and notification bell button to be updated to more of our videos. Going back, with the stock market in its current situation, it is believed that a recession is quite possible to happen. In the US, a recession is defined as 2 consecutive quarters of declines in GDP, in which the state has already experienced one, and there seems to be one in sight, either in the second or third quarter. Suppose it were to be positive in the second quarter, but went to negative in the third. In that case, technically, it is not a recession. But for Wood, it is close enough. There are a lot of headlines regarding inflation, and there have been massive supply chain issues brought about by the zero-COVID policy in China, as well as Russia's invasion of Ukraine. Because of these reasons, PPI inflation raised to 11.2% year over year, while CPI upped 8.5%, personal consumption deflator upped 5.2%. And the metric with which the Fed pays the most attention to is core PCE deflator, or core-to-core personal consumption expenditure deflators, excluding food and energy, which they consider to be very volatile, more volatile than the underlying core inflation is 5.2%. Towards the end of her video, Wood said that innovation solves problems just might become a new mantra. She said this is in line with margin degradation that may be bringing disappointing profits to companies who are not controlling their expenses, but can be solved by using more automation and increasing productivity. Adopting innovative strategies may be a way to lower costs and sustain margins. TSLA, or Tesla stock, is still overvalued, at least from a conventional viewpoint. However, there is more to a stock than just its earnings and market cap. TSLA has been fundamentally overvalued for almost a decade, and it has still increased. However, as of late, Tesla stocks have been significantly dropping. It is currently sitting at $724.37 and went down by 5.88%. However, it is to be noted that a lot of factors affected this drastic drop, and that Tesla is not the only company experiencing such a downward spiral in stocks. This has been brought about by a lot of unforeseen and unexpected happenings all over the globe. The COVID-19 pandemic, for one, affected manufacturers a great deal. The war between Ukraine and Russia also affected the economy. Still, the following information proves that Tesla is still on top of the electric vehicles, or EVs, industry. On December 28, 2021, Musk disclosed Tesla's stock sales totaling $16.4 billion since early November, amounting to nearly 10% of his stake in the company. On March 22, 2022, Tesla officially opened its German plant near Berlin, supplementing auto assembly plants in Shanghai, Texas, and California. Moreover, on March 28, 2022, Tesla disclosed plans for a stock split, conditional on stockholder approval, to expand the company's authorized number of shares at its 2022 annual meeting. And on April 20, 2022, Tesla reported Q1 2022 net income of $3.3 billion, a quarterly record exceeding Wall Street estimates as revenue surged 81% year over year to $18.8 billion. According to a recent article published in Barron's Magazine, an American weekly magazine/newspaper covering U.S. financial information, market developments and relevant statistics, now is a pretty good time to buy Tesla stock. Although some analysts foresee a crash and others expect gains of more than 100%, the debate is far from settled. But 2 metrics make shares of electric vehicle leader look unusually attractive. If you liked this video, visit our channel and watch our other videos.